Let's talk about why I think you should vary hold times within your strategies depending on what the strategy is looking for. So, we're going to go over the two main strategies that we use over at StatsEdge Pro. We have four in total. And you can kind of bucket them into trend following and mean reversion in some fashion. So, we're just going to kind of split those. So, first of all, we're popping in here. It's this gray shaded area. This is the combined strategy curve, and then all of these lines are just the individual strategies. But the idea here is what we do over at SetsEdge Pro. If you're not a member, go to setsedgetrading.com, try it out there. But what we're doing is we're combining different strategies where we want to be in some trend following, we want to be in some investment, we want to be in some mean reversion, some short-term pullbacks. We want to diversify across strategies, which also means we're kind of diversifying across time frames. And the reason we're doing that is because, again, I believe that we are going to smooth out returns, that there's going to be always a time where some strategy is following off. You can see, full transparency with this. And on my website, there's times where we have equity drawdowns. There's months, periods where we're not making any money. It's just the way the market works, the way it's going to happen. If you want something makes you money every day, go find a guru in a fancy Lambo. But what we're trying to do is have a lot of strategies, and most of them will work most of the time. So we're going to talk about two, and again, why we should diversify against them. Because a lot of people say, okay, I want to diversify against strategies, but they'll say, I'm going to put a trailing stop in for each symbol. I want to hold each symbol until the trend is over or until this trailing stops hit. I don't think that's the move, and I'll kind of show you why here. So this is an example of a trade in which we took on ANF, right? So nice, insanely strong trend on ANF. The idea was we were looking for mean reversion. So these are weekly charts. So we're down, a couple months in a row, and then we always look for an extension level. We know exactly what we're going to trade on every Sunday night, and then we just wait for those alerts to happen. We have a Discord alert bot that tells us the second a price is hit. If you're a StatsEdge Pro member, I cannot implore you enough. Come join the Discord, even if you don't want to chat with anyone, because it's set up to my Trading View account. The second a price is hit, it will just send you that alert directly to your phone, your Apple Watch, your iPad, whatever it is. Uh, Computer as well, of course. But we're looking for this to occur, and then you can see we're looking to get out the next week. Monday is when the back test is done. Some discretion obviously applied to that, but you can see not too much. And you get a nice good next week, and then just enters a range for a long period of time. This other one we're looking at as well, same kind of thing. Strong weekly chart gets cut in half in like 3 to 4 weeks. And we get alerted right down here. As that extension happens, we're looking to buy and then to get back out. Now, this particular strategy, we're looking to get in and we're looking to get out quickly. And the reason for that is we have to think, why would something like this work? I'm not one who's just going to say, look, I figured out the market. This is all magical stuff. No, there's a reason why mean reversion works. There's a reason why trend following works. So we got to keep that in mind when we're taking trades, because it will help us to reaffirm that what we're doing is the right thing. So the reason that mean reversion works is because there's got to be people out there who are covering shorts. If you were short from this thing at $30 and then it drops down to 18, you're probably going to be pretty interested in covering those shorts. Also, if you are a value investor, if you're a Buffett style nerd and you say, I've done my discounted cash flow gobbledygook on this one, and I think it's worth around $15. You might start buying it when it gets to that, this area right here. But let's focus on those short sellers. Again, they have to buy the stock back. It's the only way they make money on the trade is to buy the stock back. So as this thing is selling off and as it's popping back up, if you're somebody and you made a lot of money short in this trade, you want to get out. But something caused this move. Something caused this company to get hammered. That was some sort of fundamental shift. It just had to have been. Just companies don't get cut in half for absolutely no reason. So as this thing is bouncing, we're getting involved, but we understand that we are mean reverting. Mean reverting means going against the trend. And we know that asset prices trend over the long run. So if we're going against the trend, we just want to trade very quickly. That's why, again, I think I'm not going to blanket statement for everyone, but I think if you're mean reverting, You should be quicker with your trading. You could apply this to intraday trading. If you're somebody who's following a trend, that might take longer if you want to see a breakout and a continuation higher. Might have to have a little bit more patience. If you're someone who is a mean reversion person, then you may want to get out of trends quicker because again, you're counter trend trading. This is a perfect example from our trend following system. So our trend following system uses anchored VWAP. It's looking for breaks of major anchored VWAPs for us to get involved in trades. A lot of other things under the hood, but that's the main purpose behind it. Again, this is a weekly chart. You can see the break happened right here, and then about 2 months of nothing, just sideways, absolutely nothing. Nothing's happening in this trade. However, you wait a little bit, and then something like this happens. Of course, not all the trades are winners, right? I'm not the guy who would ever tell you that. I'm just giving you these examples because I think they really hone in on this reason. You had to be very patient for even the breakout, which happened way back here. And this is 2021. And then you're not exiting till the end of 2021. So when you're trend following, the reason we always want to get into the reason why trend following works is because what will happen is something will start to hit new highs, and it hits new highs because people are buying it. There's some sort of theme that they're getting involved in, right? You can think of right now what's hot: psychedelics, space, robotics, autonomous vehicles. That is going to take a while to kind of get its way up to a lot of these institutions who are going to say, oh, space is kind of interesting. This thing's taking off. The early people had already pushed that move. So, what you're hoping for with trend following, the reason that you use kind of longer term trends is you're trying to ride that trend as people start to get involved, as people start to notice the thing that you didn't notice before. You can see how, again, mean reversion or pullback trading, that's like an event. This thing has gotten too far gone. Somebody's going to hit the buy to cover button, and that's what's going to cause a pop. Trend following is more of a process in which we're going to break out, but it's going to take a long time for everybody to kind of agree with our thesis that this is going to be a good thing. And then it starts to go. Now, mean reversion to the upside, you could probably look at something like this and say, hey, it's a little bit overdone. It's time to move. But for trend following, because it's a longer term trade, we need to use longer term thinking. We need to use longer term exit plans. We just can't exit because we believe that, hey, this thing's gotten a little bit too extended, or we would never be able to catch moves like this that went from $20 to 60 by the time we got out. So just wanted to kind of grab you and say, hey, a lot of people, they want to trade different strategies, but they don't really fully grasp and understand that different strategies require different hold times. And I'm not just saying day trading versus swing trading. You can see both of these are done on weekly charts. Some you're holding for a week, some you're holding for months. This particular example from the trend following, you're holding much longer. So think about that. Do you have the same exit plan regardless of what you're trading? There might be a little bit of edge to add to your trading that way. So again, thank you guys for tuning in. If you're interested at all at Stats Edge Trading, again, go to statsedgetrading.com, sign up there, and I will see you guys in the next video.